Well, South Africa's economy shrank by 1.3% in the last 3 months of 2022, and this after growing by 1.8% in the third quarter. So overall, then, the economy grew by 2% just last year. Power cuts hit the major sectors, with 7 out of 10 industries declining. But for more analysis on this, we're now joined by senior economist Dr. Azar Jammine this morning. Dr. Jammine, thank you so much for your time, and good morning to you. First, let's perhaps get some clarity from you. What informs this decline that we are seeing in the fourth quarter?
I think it's very straightforward to analyze why the figures came out as weak as they did. You noticed and you mentioned that most sectors saw a decline in growth. In part, it was due to the fact that the third quarter surprised on the upside, and so one was comparing against a high base from the previous quarter. However, on top of that, undoubtedly the major factor was the increased intensity of load shedding. And a secondary factor was that in October we had a 2-week Transnet strike that interrupted our ability to export. The combination of these undoubtedly contributed towards this contraction, which was bigger than had been anticipated, just in the same way as the third quarter improvement had proved to be stronger than had been anticipated.
Yeah, Doc, we also understand that finance and trade are the biggest drags on the growth. I mean, what's the impact then of these industries, and I'm sure amongst others that play quite a significant role in our economy, but these two, finance, trade, what impact do they have on the economy, and as well as when we're seeing these numbers, what will then have on economic growth moving forward?
Well, undoubtedly, those are two of the largest sectors, and they were negatively affected by load shedding. You've got to bear in mind that the financial services sector incorporates a lot of small businesses, business enterprises that were negatively affected. The trade sector incorporates both retail trade and tourism, and clearly was negatively affected by load shedding. People are unable to go out and spend as much as they would like to when there is load shedding. So the combination of these certainly is something to bear in mind.
And obviously we can say the same for industries such as agriculture as well. Again, the impact of load shedding, being seen there when it comes to those numbers. I want to talk on the positive side, though, Dr. Jammine. Any positives we can take from these statistics?
There was one positive, and that is that in the midst of all these declines, there was a pickup in fixed capital formation of over 1%. And that is one segment of the economy that has been dreadful for the last decade or so. We have seen the level of fixed capital formation, or what used to be called fixed investment, declining to extremely low levels in the last decade due to a variety of factors, including corruption, including incompetence and lack of capacity within public service to actually take decisions on and implement projects. And thirdly, there's been an escalation of criminal activity that has actually impaired the ability to undertake capital investment, sabotage, cable theft, construction mafia and the like. And this actually improved and continues an upward trend that has been in evidence for the past year or so. It's not a dramatic upward trend, it's a shallow upward trend, but it does mark a positive deviation from what we have had in the past, and appears to represent an example of the manner in which a lot of the huge infrastructural investment programs that the government has announced, that a small part of them are starting to see the light of day. Some of them in renewable energy, some of them in transport, and I suppose that is the most encouraging feature of this latest release.
And which industries would you say are yet to recover to at least pre-pandemic levels of production?
Oh, without a doubt, the construction sector. And that's why, yes, those figures were relatively encouraging. Manufacturing, mining, the productive sectors of the economy are the ones that have failed to recover to pre-pandemic levels, with one exception, agriculture. But this suffered in the fourth quarter because of load shedding. But prior to that, agriculture had been doing very well. But mining, manufacturing, construction, electricity, all the productive sectors of the economy, rather than the services sectors, they're the ones that have been lagging behind. And unfortunately, they also tend to be the most labor intensive. And that is why one also sees basically the employment levels still lagging behind GDP. Although overall GDP is back to where it was pre-COVID, employment is down to about 5% compared with where we were pre-COVID, because we're not producing enough. And this goes against the grain of what the government is trying to achieve, which is reindustrialization.
Right.
But there are many factors that influence this still.
Well, Dr. Jammine, thank you so much for speaking to us about this, bringing some clarity for us this morning with regards to the fourth quarter GDP figures and getting that reaction from Dr. Azar Jammine. Thank you for your time.